In this video, I'm going to talk about the entry is the most important part of the trade. Stay tuned. Hey traders, a very warm welcome to you. Okay, so the entry is the most important part of the trade. We hear this quite often, but I think this is a big myth, and I am going to show you why I think that's the case. And I think you may agree with me as well watching this, and you may also agree with me if you don't after I've run through the video. Okay, so we have a scenario now where we've got a trade and we're taking an entry here. Here's our entry and here's our exit. I think we'd agree that that is a pretty good trade. Now, what happens if we have our entry and the price does this? Is that still a good trade? It is if our stop happens to be here. It's not if our stop happens to be here. So what value does our entry have on that scenario? Not a lot. Sure, if we entered right at the low, we would be absolutely perfect. But how often does that happen? Very, very rarely. So our entry in this scenario is important because yes, the winning part of the trade is from the exit to the entry, but equally as important is what our stop level is, what our risk management, what our size of position is. If our position is so incredibly big for our account size, we're going to be stopped out. We can have a really good entry within 10 ticks, but if we've got a 10 tick stop on a massive size, it's pointless. So we have to know, hey, our stop is here, the market has a bit of a noise, and it's moved on and it's pushed on to the high, and we're doing all right at the high. Now, the reason that people focus so much on the entry is because the exit, once you have taken your exit, it's forgotten about. Most people forget about it. They don't analyze it. They don't know if it's a good exit or a bad exit. But entries, they know because they're watching. They take the trade, they're watching. What happens? It goes straight up from their entry. They're long. They think they're a genius. It goes down from their entry. They think they need to improve the entry. They think it's bad, or they get stopped out. That's why people focus so much on the entry, when in reality, we've got the entry, we've got the exit, we've got the stop placement, we've got the position size, just 4 things we can think off the top of our head, which are very, very important for the trade. And even that example there, we talked about, hey, if you've got a tight stop, you're going to get pinged. Doesn't matter how good your entry is, unless you're the lowest tick possible, you're going to get pinged. So stop placement, also very crucial. And then let's think about your exit. Is that a good exit if the price continues on right the way up for another 10 times that move? You might think it is because you've made £1,000 on the trade, £100 on the trade, whatever it may be, and you may think, oh, that's a good exit, but it's in reality, is it a good exit? If you were going short at that point and it was an entry and it shot off to the moon, would you consider that to be a good entry? You definitely wouldn't. You'd think that was the worst entry ever because it's gone straight against me and it's just ripped straight to highs, and I've just literally sold into a freight train going to the upside. However, when we're talking about an exit, we give ourselves a nice pat on the back and say, oh, that was a great exit. So this is why it's a little bit of a confusion, I think, and a bit of a myth that the entry is the most important part of the trade. It's not. Everything is important. And yes, we could say, okay, well, even if my exit is bad, my exit is consistently bad, I could still make money within reason. But if you're not improving your exit, you're leaving money on the table. If you're leaving money on the table, you're adjusting your edge dramatically. If you worked out and you did some analysis on your exit and you said, hey, in actual fact, you know what, if I put my exit up by another third on my normal target, I would still win 90% of my trades. This is just a way of improving your bottom line, and most people will go out and look for another trade for that, or in actual fact, you could be adjusting that. Now, let's talk about when people look at the entry and they say, okay, well, it's the most important thing because actually if my entry is bad, then the whole trade could be bad. If I get a bad entry, then I'm not even going to get a chance to get an exit. It's not true, is it? Because actually you're always going to exit a trade, unless you're investing for the long term, of course, and in which case your exit is something different. You've always got to have an exit to your entry. So whilst, let's be honest, if you can make a complete mess of your entry and your position size is wrong, then you're going to have a bad trade. You're going to have a bad trade. You might exit down here and then you say, okay, well, actually my exit was bad because actually the price then shot up and I'm such a bad exit. But then you couldn't say, okay, well, actually maybe it was your entry that was bad. Maybe your entry was bad because you could have gone in a little bit later. Or then you could equally argue, well, actually, yeah, it was your exit was bad because you should have given it a little bit more room and a little bit more position size. So can you see the equal nature to each of these? Entry and exit, very, very similar in terms of how important they are. So when people focus on the entry, understand why that's a thing that comes to people's mind a lot, because you're watching it. It's the first thing you're doing, you're looking at it. And if you've got a winning trade, you automatically are not too bothered about your exit, even if you're a bit early or a bit late. It doesn't matter, you still have a winning trade and people feel that's good. When in reality, when you look at both of the parameters, the entry, the exit, whether you're getting stopped, whether you're getting a limit entry, whether you're getting a limit order in, whether you're getting stop market in, or whatever it may be, position size, all, in my opinion, need to have equal weighting. And you've got to have the three kind of pillars, and in fact we've talked about the fourth as well, but you need to have a lot of things in place to make the trade work. So I think the takeaway from this is, hey, everyone talks about the entry, and a lot of kind of people will say, where's your entry, what's the entry, what's the entry? The key, I think, is to focus on the whole picture, because if you focus on improving the whole picture, not just your entry, yes, the entry is important, but the exit is equally as important. And that is in terms of if you're taking a profit or if you're taking a loss. But all these things, the position size is equally important, if not more so. These things all need to be taken into account, which is why it's a bit of a juggling act with trading, why we've got to work on one, work on the other, and why we always say the importance of journaling, writing down the information, because we don't know. If we're not writing down that actually our exit is always early, we're never going to be able to know that we need to stretch our exit a little bit, even if we're profit or loss. Whichever way we're looking at it, we're always focusing too much on the entry. So let me know your thoughts and comments on that, guys. What do you think about entry, exit? Is the entry the most important thing? Do you disagree with me? That's cool. Put it in the comments below. Always interested to hear other sides of the argument. Do you agree? Do you perhaps think that exit is the most important thing? Is stop placement the most important thing, and limit order placement, or whatever it may be, or target placement? Always appreciate comments below. Anyway, guys, if you'd like to give a thumbs up, see you on the next one. Take care. Good trading.